Dzień dobry Państwu, witam serdecznie na webinarium ICAN Institute zatytułowanym Generowanie i maksymalizacja zysku w nowej rzeczywistości. Ja się nazywam Paweł Górecki, jestem redaktorem naczelnym MIT Sloan Management Review Polska, a moimi gośćmi są profesor Hermannem Simonem i dr Marek Dietl. Profesor Simon jest wybitnym specjalistą w dziedzinie polityki cenowej z wieloletnim doświadczeniem, byłym wykładowcą takich uczelni jak Harvard Business School, Stanford University oraz Massachusetts Institute of Technology. Jest współzałożycielem firmy Simon Kucher & Partners, światowego lidera w dziedzinie doradztwa cenowego, gdzie obecnie pełni funkcję przewodniczącego Rady Nadzorczej. Jest cenionym prelegentem, publicystą, autorem bestsellerów takich jak Power Pricing czy Hidden Champions. Dr Marek Dietl jest prezesem Giełdy Papierów Wartościowych w Warszawie, doradcą ekonomicznym prezydenta RP oraz adiunktem w Szkole Głównej Handlowej w Warszawie. Ma niemal 20-letnie doświadczenie w obszarze doradztwa strategicznego i branży venture capital. Zasiadał w radach nadzorczych, komisjach rewizyjnych i komitetach inwestycyjnych ponad 25 organizacji. Nasze webinarium będzie prowadzone w języku angielskim. Welcome, gentlemen. It's nice to have you here. Good morning. Professor Simon, President Dietl, I'm pleased to welcome on our webinar about profit management. We have about 45 minutes for a moderated conversation structured by questions I've prepared. But after this, and after a short break, we're going to have a short Q&A session, so we'll try to answer some questions from our audience. Let's begin to start with some context. When we talk about profit, now it's impossible to ignore economic slowdown of the pandemic. So let me ask you about the resilience of the companies, and let's focus on the Polish ones because those are the most interesting for our audience. So are Polish companies better placed to get back to growth in comparison to our OECD countries? I know that Dr. Dietl has a presentation, so please share it with us and please answer the question.
Good morning once again. Thank you very much for having me here. I collected vast majority of my consulting experience with Simon Kucher & Partners, so I'm particularly glad that I can be a part of a seminar of Professor Hermannem Simonem. Indeed, I prepared a short presentation about Poland and resilience of the Polish economy. And the answer to your question you asked is the shortest one is yes. I think Polish economy are better positioned to be resilient against the pandemic crisis. But I would like to share with you some of my thoughts why I do believe Poland will be one of the COVID winners. As I divide my presentation, it will be short, don't worry, into two parts. First is Poland economic outlook, and then companies' profit margins in Poland. So first of all, if you look at the GDP growth rates starting from the last crisis, 2009, we see that Poland performed versus Eurozone much better in almost every year. The growth was much better in Poland than in the European Union. The forecast the first estimates for 2020 are we had the first decrease in our GDP. In real GDP since 1991. So after 30 years of uninterrupted growth, we have first GDP contraction, but Poland seems to be recovering quite fast to the pre-COVID levels until the end of this year. And the question is where it comes from, this growth rate. So first of all, it can be stimulated by the government. But if you look at the general government gross debt as a percentage of GDP, it is much higher in Eurozone than in Poland. In Poland is around 50%, and in Eurozone is currently approaching 100%, but in the past it was rather 70, 89%. So this growth rate does not come from the government debt. Also in the recent fiscal stability risk classification by EU members, if you look at the fiscal risk for Poland, Poland is the only country which have all risk at the low level. Even the economic powerhouse of Europe, Germany, have two medium risks rising from the public sector. So we have very healthy public finance, little debt, public debt. So the growth rate do not come from fiscal stimuli. So it can come from the monetary stimuli. So let us have a look at the total assets of the European Central Bank and Polish National Bank versus GDP. And this dark blue bars are representing the share of the assets of the central bank in the GDP of Eurozone, and the light blue bars are for Poland. And we can clearly see that the assets of the central bank are much in relation to GDP are much higher in Eurozone than in Poland, especially in the crisis. We see that in 2020, for the Eurozone, it's almost double the size of the monetary intervention. And also since the Eurozone crisis in 2011, we see that this factor of 1.5 up to 2 more money is, inverted comma, printed in the in the Eurozone than in Poland. So this GDP growth does not come from the monetary stimuli, or this difference between growth rates in Eurozone and Poland doesn't come from that. So maybe Polish companies are more leveraged. That's why they grow faster, but in expense of the risk. And again, it's not true. The average debt securities and loans of non-financial enterprises. I leave aside banks, but Polish banks are generally much more healthier than the Eurozone, but it's difficult to compare. So non-financial enterprises, non-financial companies are on average almost twice as much indebted in the in the Eurozone than in Poland. So we see this growth does not come from the gearing of the companies. So where it comes from, maybe there is a kind of competitive advantage. So let us have a look at the unit labor cost per employee dynamics since the joining of the European Union, and we see that it was actually fluctuating around the same level. Labor unit cost, for those who are not economists, is the relation between cost of labor, but corrected by the productivity. So it's first indication of the comparative advantage, as the economists is called. So in business, it's called competitive advantage. I simplify the message, but more or less it's true. So we see that it was until 2015, the unit labor cost in Poland were developing on par with the Eurozone. Since 2015, there was a change in the Polish economic policy, and it was due to social transfers and also some other active measures imposed by the government. We have much faster growth of labor unit costs. It means that the salaries versus productivity were growing faster in Poland. So wage rates were growing faster than in the Eurozone. Should we worry about that? Well, if we look at the productivity versus wage rate, we see that even currently, after this increase of salaries, we have a productivity gap of 25.3% to the EU 28 average, as our market is EU 20 average, to 28 European Union 28 countries, and the wage rate is still frigid. So it's more than 2.6 times more is the average wage rate in the Euro 28 than in Poland. So still we are very competitive in terms of wage rate versus productivity. So it's actually, in my view, it's a positive development that we decrease the Gini coefficient, which shows to what extent is the distribution of income is uneven in the economy, and we increased our wages because we are still on the safe side. So this is the productivity versus, labor cost versus productivity, was the drivers of the past economic performance of GDP growth, and we are still well positioned in the European Union to keep this comparative advantage. does it translate to the profits? As the profit is our hero of the day. So when we look at the profit, it's a gross profit margin, because this our statistic office present this way. And also it's important for me that the gross profit, because I will discuss taxes later on. So we see that it's not tremendously high, and it's somewhere around 7%, sometimes reaching up to 9%, sometimes goes below the 6%, but it's something crowding around the 7.5, 7.4 mark. What is the average? So we see that the companies are not tremendously profitable in Poland, although we have so favorable wage rate versus productivity. But if you look in the details, you can see that actually the companies which are organized as a sole traders or partnerships, so they have single taxation, they are much more profitable, especially the micro companies. They have profitability approaching 25%. Small companies, including micro, are over 10% or sometimes even over 15%. The companies which are medium-sized, they have average of 8%, so a little bit higher than the average for the economy. And large companies, which are organized as sole traders and partnerships, have the profit margin, gross profit margin before tax, below the average for the whole economy. The same numbers, but for incorporated companies. So they enjoy the double taxation. So once you are taxed on your profit, and then your dividends are taxed as your personal income tax, then you see that you have a dramatically other parameters. You remember small and micro companies, they were approaching 20+% as a margin. But actually, when they are incorporated, the profit margins are much lower. And the same goes for micro companies. When it comes to medium and large medium companies, they have also lower profitability when they are incorporated. And large companies are on par with their sole traders counterparts. So basically, the finding is that it might be, it's of course hypothesis, that it might, gross profit margins might be somehow also influenced by the earnings management by the owners of the companies. If they are organized in the as a companies, as a corporation, they try to do earnings management via taxes, and they report lower profitability than indeed it's the case. And when it comes to micro and small companies, those who are incorporated are actually much bigger in terms of revenue, so they might influence this average. So when we look at this first number, we have to bear in mind that it can be somehow underestimated. And when it comes to large companies, there is a surprise happening when they are going through IPO and they are listed. Here you have a chart showing the profit margins, pre-tax profit margins of the or gross profit margins of the companies listed on the Warsaw Stock Exchange. Here is according to the findings of the industrial organization. So small companies are less profitable. Please remember that for the private or mixed public and private companies, the small companies were more profitable, what is per se quite surprising, especially if they are sole partnerships. So they are sole traders or the partnerships. So here is in line with the expectation of the microeconomic theory. So small companies are less profitable than medium companies, and medium companies are less profitable than the mid-cap companies, and the large cap companies over 1 billion zlotys in market cap, they are most profitable. So the magic happens that if you go through the IPO, you'll get immediately more profitable. It can be, an optimist would say, of course, best companies go to the public market. Well, I would be more prudent and say simply there is an incentive for the companies to show real profits if they are public companies, because they are rewarded for that with their market capitalizations and stock prices and stock returns. And to finalize my intro talks, if you look for really profitable companies, you should look for the stock exchanges. Actually, the most profitable stock exchange in the gross profit margin is Warsaw Stock Exchange in Europe. The second is Euronext. It's a French-based company which runs stock exchanges in 7 countries in Europe, 6 in European Union, 1 in Norway outside of the European Union. It's 45% gross margin, so beating all the industries I know. And Deutsche Börse is third. Just to give you an idea, Deutsche Börse have usually around 2.7, 2.8 billion euros revenues. Warsaw Stock Exchange have like 100 million euro revenue. So it's an absolutely huge company compared to us. And London Stock Exchange, what is the financial hub of, used to be financial hub of Europe and the world, they have enjoyed quite healthy profit margin, 35%. So this was the intro, and I'm looking forward, as all the audience, to the comments of the Professor Simon, who is the prime expert on profitability. So thank you very much for your attention, and I mute myself for now.
Thank you, President Dietl. Professor Simon, do you have any comments on that?
Yes, I have quite a few comments. First,
so please.
On the stock exchanges, they are about the most profitable companies in their countries. For instance, Deutsche Börse is the only company in the DAX 30 index. These are the 30 largest publicly listed companies in Germany with a net return, so after taxes, of more than 20%. Dr. Dietl showed the gross before taxes, which was 39%. After taxes, it's about 25%. Another interesting insight is that the profit situation is obviously very varied in terms that smaller companies have higher profits, larger companies have lower profit margins, and the international comparison is also interesting. For OECD countries, I usually express profit in net terms, so after taxes, whereas Dr. Dietl had it due to the statistical situation before taxes. The average of OECD countries is about 4.7% net profit margin, and Poland is very close with 6 to 7% before taxes. So if you deduct 20, 25 or 30%, that varies from country to country, you are also in that range. Polish companies are actually much better than German companies because the average in Germany of net margin is 3.4%. Another interesting observation is that profits have a negative correlation to the size of the countries. You would assume that larger countries with, due to economies of scale, have larger profit margins, but the opposite is true. The highest net margin is in Switzerland. Low taxes plays a role, but also the size of the market. And how do I explain this? That economies of scale don't have the same effect on profitability as the intensity of competition. In larger countries, the intensity of competition is higher. That puts a pressure on margins, and Poland is probably somewhere in the middle. So companies are very profitable. What astonished me also is that the large publicly listed companies have such a high profitability. Perhaps Dr. Dietl could comment on that because that is not true for Germany. In Germany, mid-sized companies, the so-called hidden champions, have a net profit margin of about 8%, and the large companies are average 4.5 to 5%. So is there an explanation why the large listed companies in Poland have such a high profitability of, I think it was 17% pre-tax?
All right, thank you, Professor Simon. I'm glad that there's a huge portion of optimism for Polish companies here in what you're saying and what President Dietl said before. Okay, so let's move to the next question.
I would also say a few words,
yes.
like to say a few words on the resilience.
Please.
First, it's amazing that the Polish gross domestic product only declined by -2.8%. And I would also like to learn more about the reasons. Very interesting. It's not due to public spending. It's also not due to the central bank printing money. So there must be some reason in the economy on the consumption side or on the export side, in spite of the fact that Poland has a slightly higher corona incidence than Germany on a per capita base, but still the economy suffered much less. And when you talk of resilience, I think there's a huge unexploited potential in exports for Poland. I will come back to that in some of the later questions. For instance, your exports to China are negligible, and whereas Germany has huge exports to China. Yeah.
So let me ask the next question. Why profit maximization for some people is a controversial topic, and for some companies, some managers even avoid it, focusing on other metrics. Why do you think it shouldn't be the case?
If you want to make yourself unpopular in any kind of discussion, public or private, you should emphasize profit maximization. I mean, what is even worse is if you talk of maximization of shareholder value. And there are many reasons it's a difficult issue. Let me just give you one observation. I recently did a study in Germany with the following question. If a company has a revenue of 100 euros, how much remains as net profit after deduction of all costs and all taxes? The average outcome was 22.8%. That's what people believe. The reality, as I said, is 3.4%.
Yeah.
And it's even worse in the US. In the US, the average outcome of similar surveys was 31%, and in Italy, it was 38%. So normal people think that company make 20+%, 30+% net in profit margins. And if you have that perception totally divergent from the reality, you think that profit maximization is exploitation of workers, of the resources, child labor and everything. So I think one way to improve the attitude towards profit is to correct this extreme misperception. There were some people who said 60 or 80% are net profit of 100% revenue. Unbelievable.
Yeah. And also some people say that there is a contradiction between social responsibility and profit maximization. What do you say to those people?
Yeah, I would say the majority of people has the perception that profit maximization is the opposite of social responsibility. And of course, we have this current discussion about shareholder versus stakeholder value, as if these were diametrical opposites. In my opinion, the opposite is true. A company which is profitable pays taxes, yes, can behave in a socially responsible way. A company which makes losses or permanent losses does not contribute to the society, loses jobs, creates unemployment instead of employment. So recently, the dean of the Harvard Business School said to me, the first social responsibility of an entrepreneur is to make profit. And this coincides well with the definition by Peter Drucker, who said, profit is the cost of survival. Yeah. Only companies which make profits, which are profitable, will survive, keep jobs, pay taxes, etc. And that is actually the topic of my new book, true profit. No company ever went broke from turning a profit.
Yeah, which is true, by the way, yeah. Professor Simon, one more question to you. In the article we're going to publish in the next issue of ICAN Management Review, you say that profit is actually opposite to wasting assets. Could you please elaborate on that concept?
Yeah, that's another statement which is perceived as provocative. Let me take a very simple example. You have to transport a good over 1,000 kilometers. As an entrepreneur, you choose the less costly way to do that, be it by truck, be it by rail, or whatever. So you minimize the waste of resources in fulfilling this task of transporting the good. On the other hand, if you have a certain resource, be it a raw material or something, let's take copper. Now you have to construct a transmission system across the Atlantic. In old times, when you put a cable underwater, you needed 120,000 tons of copper. Today, with a satellite, you need 800 kilos. So which version do you choose? The 800 kilo version. You do not waste resources, you save resources. So both the reduction of costs and the maximization of the benefit you get from a resource save resources. That's why I say it's the opposite of waste, profit maximization.
All right, thank you. The next question, how, probably to both of you gentlemen, how perception of profit changed during the pandemic in the companies? And if it really changed, what will be the consequences?
Marek?
Shall I start? I'm a bit shy. So maybe let me start with your, before I move to the question, with Professor Simon's question about what are the drivers of the relatively mild contraction in GDP in Poland, is consumption went down, but the industrial output and the investment went down. Industrial output is higher actually than before the pandemic, and is mainly exported. We have record high net exports, so mainly contributed by export. And indeed, it's astonishing how little we export to China. Except of powdered milk and apples, I don't think we are quite successful in that. But maybe you can advise Polish companies how to get to this huge and booming market. And coming back to perception of profits, I mean, it's incredible how it is different between the industries. Warsaw Stock Exchange, I'm mainly exposed to my issuers, so there are 1,000+ companies issuing bonds and equities on our market. So we are #1 in the world in terms of number of game development companies listed with us, and they enjoy very high valuation, multiplies 100 times profit or whatever, 20, 50 times revenues if they are not profitable. And they do not care about profit at all. They are mostly focused on the number of users and other metrics. On the other end are industrial companies which realized that, as Professor Simon said, this profit is the measure of or mean to survive, and those which were lean and agile and adjusted quickly became quite successful, and they survived. The worst situation is with consumer goods, retailers and suppliers. They somehow it was very difficult for them to downsize quickly. And in the past, they enjoyed also quite cheap access to capital, so they were not so strongly incentivized to focus on profit, especially on operational profit. And this is the also this is a puzzle, and I cannot answer this question. Because we talk about low profit margin, but we also have record low interest rates. So actually, companies can survive much longer than in usual or the past interest rate environment. And the question is, if we send correct incentives to the companies to really focus on profits, or we go inverted commas full Monty like gaming companies. We have cheap access to equity financing, cheap debt, and we focus just on users and communities and so on.
Yeah, how has the perception of profit changed? The first concern under the crisis is, of course, liquidity. Do we have enough cash to pay our daily dues? But the attention to profit has dramatically increased. It varies from industry to industry, both from hindsight, because companies which have been profitable in the past have been able to accumulate reserves and will survive the crisis. But also with regard to the future, companies have to pay more attention to profit in order to be able to pay back the debt they have incurred during the crisis. So I would say overall, we have a much bigger, stronger attention to profitability. And of course, that's most pronounced in industries which have been very strongly affected by the crisis, like tourism, hospitality, hotels, retailers, etc., because they are really in a dramatic situation. And let me also add something on the export situation, which Dr. Dietla mentioned. Exports are a strength of the Polish economy. And one reason why you haven't been so affected is that Polish exports are quite well diversified. The biggest percentage goes into machinery, which did not suffer that much. Second is automotive. Actually, furniture, which we think is very important, is not that important. It contributes only 5% to Polish exports, and of course that's heavily affected by the crisis. China is the big unexploited potential. Just to compare two numbers, Polish exports to Germany are 57 billion euros in 2019. What is the number for China? 2.7 billion euros. So 1/20th to China than to Germany. For German export, it's very different. China is now our biggest market, ahead of the US, with exports of more than 100 billion. So how can it be that Germany, with the same distance to China, exports 100 billion and Poland exports only 2 billion? And my advice to Polish companies is very clear. You have to set up your own subsidiaries in China. You have to go to China. Don't think that the Chinese will buy from you in Poland. There are more than 8,000 German companies in China, and they sell there. They sell and export. So I don't know how many Polish companies are in China, but I would guess maybe 100 or 200, certainly less than 1,000. So this is a huge opportunity for the future. Set up your shop in China, establish subsidiary, and then you will also sell there because the demand is unlimited with 1.4 billion people.
Thank you, Professor Simon, for the advice. And the statistics you mentioned are really intriguing and inspiring. I have another question similar to the previous one, but slightly different. Can focus on profit maximization accelerate recovery after the pandemic, and how?
Shall I start again, or?
Yeah.
Please, yes.
No, Herman, maybe it's yours.
And we have to look at the profit drivers. Profit equals price times sales volume minus cost. And how do these three drivers relate to the crisis and the post-crisis period? Price, I think the biggest mistake companies make during the crisis is to cut prices. I've got many offers from hotels where they give discounts of 50%. It's totally useless because I do not travel and I do not go to hotels, even with a discount of 50%. The same is true for airlines. So the first challenge with regard to price is to defend the prices, to keep the prices stable, not to use discounts in a hopeless situation where discounts do not work, because the price elasticity is extremely low. The demand is low, but the price elasticity is also low for certain products. Volume, there's the challenges to recover. So this means increase efforts in sales. As I said, go to China. Even for Germany, you have a gap of 10 billion, which should be closed by increasing the Polish exports to Germany. And a difficult issue will be costs. So there, the recommendation is control costs, because with lower volume, unit costs go automatically up. In Germany, we see a lot of new measures by the government which drive costs up. For instance, additional special vacations for parents, etc. So controlling costs will be very important. Also, with regard to the inflation, I expect. Dr. Dietl showed the volumes of money being printed in the Eurozone. And even in Poland, it was more than 30% over the last couple of years. So I cannot imagine that we will not experience inflation in the next couple of years. I don't know when it comes, but I think it will come. This means cost control will be extremely important. So price, try to defend, volume, recover, increased sales activities, cost control by all means.
All right, thank you. President Dietl, do you want to add something?
Well, I would like to chip in two aspects. First is this question Professor Simon raised: stakeholder versus shareholders value creation. And in context of recovery after the crisis, it seems that shareholders' orientation will prevail. There are numerous studies, cross-country studies, we did similar studies also in Poland, show that if you want to explain the stock returns in the crisis, in the pandemic, the stronger explanatory power has the pre-crisis profits and accumulated cash than ESG factors, so environment, society, governance.
Yeah.
So actually not those who were very strong in building their relation with the environment and stakeholders, but those who have a lot of cash and profits, those are the COVID winners or survivors, if you will. So I think there will be a shift towards profit. Of course, we cannot, there won't be a change that we skip ESG factors in appraisal of the companies, and BlackRock will not give up the full ESG integration to the evaluation systems. But actually, if I may call that balance of power between stakeholders, value creation, and shareholders value creation, we go to the shareholder creation to the profit, because simply those ESG projects can wait, and profit improving projects cannot wait in the face of the in the recovery of the crisis.
Okay, thank you. So could you please tell me how to make executives more profit oriented? I mean, what KPIs should they use to achieve a goal of profit maximization in the most effective way?
Marek, would you start?
Okay, I can start. Well, we had a study. The study was conducted on the companies which are listed on the Warsaw Stock Exchange, but they are there is a free float, but the rest is owned by the family. So they're listed but family-owned enterprises, and they overperformed any other form of ownership in our on our venue. So it shows when you have a clear alignment of interest between owners and managers, it's the best way to make people focus on the profits. And also what I showed, the statistic on the gross profit margins of the listed companies is also related to that, that quite often companies are managed by the people who have a vast interest in their companies. So this is the first method. And second method, if you are not listed, if you are or you are in a large bureaucracy, when you don't see the link between your remuneration and your profit performance or profit performance of the company, is what David Graeber is telling us in the book, pardon my French, Bullshit Jobs, that first task of the manager is get rid of the bullshit jobs. So jobs which do not create any value for the company or for the society, for anyone. They are just bureaucracies. And the managers who can get rid of, against inverted comma, bullshit jobs. And the measure of getting rid of the bullshit jobs is to focus on the value added and refocusing on the profitability, because this is the ultimate measure of the performance of the company. So the large corporation, large bureaucracy have to learn how to get refocus on the value creation activities, on the profits, instead of building up bureaucracies. The issue with profits versus other metrics is that managers are basically, I can tell you as a CEO of a company for the last 4 years, that when I meet fellow CEOs, one of the first questions they ask me, how many people report to you? And this is astonishing, that the Warsaw Stock Exchange is a relatively small companies, because we have 400 people and some other 40 working in our R&D center. So all in all, we are a very small company. And I have never heard in a management discussion, what is, for example, profitability per employee. And we have, let's say, 1 million zlot of revenues per employee. So we have 500,000 zlot profit on every employee. Nobody asked me ever this question, but this reporting. And the other is your company growing well? That's the discussion. So the mindset is absolutely distorted also by, and I responsibly say as a teacher, as an instructor on the MBA courses, is by the MBA courses, where somehow is, as Professor Simon nicely said, if you want to offend people, start to talk about profits. So actually it's a complete upside down, that everything but profits is discussed on in the executive education nowadays. And this is a major problem. And also the students, I teach microeconomics. Of course, it's somehow packaged around differently for the MBA student, because they will never stand an MBA with microeconomics course. So it's called about some analysis or pricing or whatever, but it's fundamentally some microeconomics. But people do not like them, and they do not want to accept the obvious facts about, for example, profit formula mentioned by Professor Simon. So those three issues I would put in the front.
Thank you so much.
I can confirm all the points which Dr. Dietl made and add a few others.
Please do.
The most important mistake is wrong goals. And let me take you the case of Volkswagen. Volkswagen for years had the goal to become the #1 auto company in the world, to become bigger than Toyota. And they achieved that in the last couple of years. Now Toyota has again overtaken them. But all the time, the profit of Volkswagen was about half that of Toyota, in spite of the revenue was bigger and the number of cars was bigger. Then you have reporting issues. I would say that much of the reporting is deception, because they speak of operating profit, operating margin, EBITDA, and companies like Uber and WeWork, when they're public, they included customer acquisition costs, marketing costs in the profits. They gave strange names to these deceptive profit numbers. Then we have the wrong incentives. Dr. Dietl mentioned that. If you offer stock options, that's an asymmetric incentive, and people go for certain goals which are not profit-oriented. You have overcapacities. That is one of the big issues driven by market share orientation, etc. And then there are a couple of country-specific issues. For instance, in Germany, we have enough startups, especially in Berlin, but we have a major scaling up weakness. So from the small startups with 10 employees, they don't make it in 5 years to 1,000 or 2,000 employees because there's not enough capital, or because you simply cannot create a consumer internet company from Germany. So the gaming industry in Poland is proving that it can be done. An interesting point in Germany is that you have team responsibility. The whole team, the board is responsible for profit, whereas in other countries, in America, in France, you have a single person who is responsible, the CEO, etc. And that leads to a clearer profit orientation than if a whole team is responsible. Role of banks, power of unions, taxes, etc. also play a role. So there's a lot of improvement potential. And I think the most important one is to correct the goals, to run a company truly profit-oriented and not market share or volume or whatever orientation you apply.
All right.
If I can chip in very quickly, do you know new parameters? EBITDA, it's earnings before interest, tax, depreciation, amortization, and coronavirus.
Yeah, I have a couple of others, which, for instance, before leasing rates, before our customer acquisition costs, before marketing expenditures, that has absolutely nothing to do with profit. Profit is what the entrepreneur, the shareholder, the owner can retain after they have fulfilled all obligations to employees, to suppliers, to banks, to the state. That is true profit.
All right. Thank you so much. And with the definition, we end our conversation today because our time is up. Thank you, gentlemen. It was a pleasure. And now before we move to the Q&A session, I have a small announcement, this time in Polish. Drodzy Państwo, dzisiejsze spotkanie ma na celu między innymi przybliżenie, danie Państwu przedsmaku tego, czego będziemy mogli doświadczyć podczas konferencji Digital Pricing, która się odbędzie już 24 marca. Serdecznie zapraszam Państwa na nią. Głównym prelegentem tej konferencji będzie nasz gość specjalny Madhavan Ramanujam, wybitny ekspert w zakresie monetyzacji i innowacji. Prosimy o odpowiedź na pytanie, czy są Państwo zainteresowani wzięciem udziału w tej konferencji, a za chwilę, a jeszcze mamy specjalną ofertę, z której Państwo możecie skorzystać, żeby wziąć udział w tej konferencji. Czekamy na Państwa pytania na czacie do naszych dzisiejszych gości, a za chwilę jeszcze więcej o tej konferencji w specjalnym materiale wideo opowie dr Witold Jankowski, prezes ICAN Institute. Serdecznie zapraszam. A my się widzimy na sesji Q&A za chwilę.
Szanowni Państwo, w czasie pandemii wiele firm musiało przenieść swoją działalność do internetu. I dotyczy to nie tylko pracy zdalnej, komunikacji wewnątrz firmy, ale wielu innych istotnych elementów funkcjonowania organizacji, w tym pricingu, ponieważ coraz częściej nasi klienci szukają informacji, komunikują się z nami w innych nietradycyjnych formach. Skuteczny pricing w cyfrowej rzeczywistości wymaga jednak zupełnie nowego podejścia niż to, które stosowaliśmy do tej pory. Dotyczy to praktycznie każdej branży. Większość procesów zakupowych rozpoczyna się bowiem w internecie, gdzie informacja na temat cen, ofert, opcji i innych istotnych czynników jest łatwa do zdobycia. Ma to olbrzymie konsekwencje dla naszej zdolności do pozyskiwania klienta i przede wszystkim do obrony marży. Wcale nie jest powiedziane w tym kontekście, że najtańszy musi wygrywać. Dodatkowo pojawiają się nowe modele cenowe. Na przykład widzimy wzrost roli modeli subskrypcyjnych oraz tych związanych z rzeczywistym użyciem lub otrzymanymi korzyściami z produktu lub usługi. To tylko przykłady. Dodatkowo COVID-19 dla większości branż, oprócz niewielu z tych, które z niego skorzystały, wytworzył dodatkową presję na ceny i marże z tym związane, ponieważ wchodzimy jednak, jeśli jeszcze nie weszliśmy, w kryzys gospodarczy. Chciałem Państwa serdecznie zaprosić do udziału w konferencji Digital Pricing. Podczas tego wydarzenia zaproszeni wybitni eksperci, praktycy pokażą, jak wykorzystać siłę cyfrowego pricingu do budowania przewagi konkurencyjnej i osiągania wyższej rentowności naszego biznesu nawet w najtrudniejszych realiach rynkowych. Jako gość specjalny wystąpi Manavan Ramanujam, ekspert w zakresie polityki cenowej i monetyzacji innowacji oraz wprowadzania na rynek nowych produktów i ofert. Na co dzień ze swojego biura w Dolinie Krzemowej doradza organizacjom o różnej wielkości i z różnych branż, w tym firmom z listy Fortune 500. Niektórzy nazywają go zaklinaczem jednorożców, gdyż specjalizuje się we współpracy ze startupami i do tej pory pomógł aż 32 startupom wprowadzić innowacyjne usługi na rynek, m.in. Uberowi. Jego doświadczenia jednak mają znaczenie i zastosowania nie tylko w przypadku startupów i firm nowej technologii, ale praktycznie każdej branży. Przeprowadził on ponad 125 projektów z różnych branż i jestem pewien, że jego doświadczenia będą dla Państwa cenne i użyteczne, zwłaszcza w kontekście zmiany swojej dotychczasowej oferty i opracowywania skutecznej polityki cenowej, która pozwoli Wam często wręcz podnosić uzyskiwaną cenę do poziomu oferty wartości, którą przekazujecie swoim klientom. Mam nadzieję, że będę mógł zobaczyć Państwa podczas konferencji Digital Pricing już 24 marca tego roku. Zapraszam serdecznie do udziału.
Witam Państwa serdecznie na sesji Q&A. Welcome to Q&A session. We have less than 10 minutes, I guess, so please let's move to the first question. I will read it. I have a Brexit-related question. On the one hand, Brexit causes an increase. On the other hand, the pandemic is putting pressure on a cut. What are your advice on trading with the UK?
To continue to trade normally. So as far as the activities in the UK are concerned, just go on under the prevailing conditions. I read this morning that for some companies with complicated customs declarations, costs have increased by 3 to 5%, but I think that should not affect your trading and marketing activities in the UK. I would go on as normal.
Okay, thank you. President Dietla, do you have something to add?
I will add just at the end of the all questions. So
okay, thank you.
Go on.
So let me read the next question. What is more important for a business, profitability or growth?
I would reunify that by saying profit maximization should always be long-term. That reunifies profitability and growth.
Okay. Next question. Most clients use the pandemic as a tool to decrease purchase prices. As we already know, this is not an excuse at all. What is your opinion?
Your opinion is, before you touch the price during the pandemic, you must know what the price elasticity is. If demand goes down, this does not mean that you should cut prices. As I said in the hotel example, if you cut prices by 50%, you sacrifice 50% of the margin and you don't attract more people under the prevailing conditions. So you must understand what the price elasticity is, how people react to price under the pandemic conditions.
All right, thank you. Next question, very long one. Perceiving profit as the main KPI seems to be obvious when thinking about long-term perspective and the need for the company to survive. However, For executives during daily orientational tasks, it is very often easier to look at the market share and revenues, which give clear indication on where the demand is and how to react to boost it. Maybe that is the reason why profit is not the major focus. It simply doesn't make it easy to make tactical decisions on how to change offering based on profit. How do you think the companies should manage their executive teams to make them aware of main goal, which is profit maximization, but at the same time, give enough tools to understand that KPI in their daily decisions?
I disagree on this statement. Let me give you an example. Some time ago, a board member of Metro said me we refrained in our retail arm from charging the value-added tax, which is 19% in Germany. So prices were 19% lower. He said it was a big success because we had 30–40% more customers. Huge traffic increase in our stores. But if you do a simple calculation, if you sacrifice 19% and your gross margin is, say, 30% in this range, you have to double your sales in order to compensate. So with 30–40% more customers, you actually reduce your profit dramatically. And you can do this simple calculation in advance before you make a decision. You usually know what your costs are, etc. So it's actually quite simple, but you must anticipate also on a daily basis what your actions will do to your sales, your revenue, and your profitability. So there's no contradiction between long-term and short-term profit maximization. And following simple rules like cost plus, etc., is always misleading.
All right, thank you. The next question. It's easy to say defense. I'm sorry. It's changed. Sorry, another question. How to turn employees into positive thinking about maximizing profit in their daily activities? They are usually focused on their daily KPIs, which are not profit at all.
Yeah, then you have to change the KPIs. You have to change the KPIs, and normally you don't want to reveal your profit. Let me give you one example, which we did for a global market leader with a revenue of about 14 billion euros. We introduced an incentive they sell to businesses, and their average discount was 16% before the incentives. Then we introduced an anti-discount incentive, and after 3 months, the discount went down to 14%. That's full 2 percentage points. Based on a revenue of 14 billion, that's 280 million euros pure profit without a loss in customer or volume.
All right.
So you have to develop creative solutions, and that's our specialty as Simon Kutscher. We are the leader in price consulting in the world. So if you can't develop it yourself, ask us. We are also in Warsaw, as you know.
Oh, yeah, sure. I think we have time for the last question. When thinking about cost, for many, the first and only thing that explains the cost are the resources. What should be the recommended approach regarding cost management?
Of course, that follows what I said before under the resource no waste paradigm. So minimizing cost under given conditions is always a necessity, or that's driving up productivity. And Marek has shown that productivity has increased dramatically in recent years. And you should not use cost as the calculation base for your price. I call that Marxist pricing. The most famous theory of Karl Marx was the labor theory of value, that only labor creates value. That's nonsense. If you do something which doesn't create value, the number of hours and efforts you invest into this product doesn't mean anything. I explain, by the way, all these things in our Polish book on pricing, which I can recommend, because I go in depth and in the details there.
All right. Thank you, Professor.
Yes, Paweł, there's one last question on how the pursuit of sustainability can increase prices. This will be one of the big challenges of the future. Yes. Marek mentioned ESG, environmental, social, government, ESG, governance. And there I see a big advantage for European companies, that we can create competitive advantages, and this will also mean value and potentially higher prices in the future. That's a big opportunity for us in Europe.
Okay, thank you, Professor Simon. President Dietl, do you want to add something at the end of this?
Very briefly, I think there are three enemies of profits, and it also comes out from these questions. One is that managers look for an instant reward, like in computer games, and it doesn't work in business that way. You have to work very hard to improve your profitability. Second is overestimating of economies of scale, what Professor Simon also mentioned earlier. And one overestimation, especially in digital products, is overestimation of network effects. So if we gain more clients, we'll have even more clients because people will like our service. So if you can give up your desire to have an instant reward, if you do not overestimate your economies of scale and the network effects, you will be fine with your profits. And this is kind of my final word. Thank you very much.
Thank you so much. Thank you, gentlemen, for the conversation. Thank you for your answers. It was a pleasure. Państwu dziękuję za uwagę i za pytania. Zapraszam na konferencję Digital Sales, o której mówiliśmy, i wszystkie inne nasze wydarzenia. Serdecznie dziękuję. Do widzenia.